Yes, Shauna, I think it makes sense to keep the two tails apart. The Model X is more costly than the Model 3 and Model Y, but it becomes more cheap when you take into account that the price drop was necessary to get the car below the IRA barrier and make it eligible for federal subsidies. That's usually seen as the primary motivation for the cuts that were made there. However, the Model 3 is probably a bigger reason for concern because it and the Model Y account for a significant amount of Tesla's sales and revenue. A lot of investors had assumed that the new Model 3 would be more affordable to compete with BYD and other automakers, especially in China where the competition is intense. There have been a lot of exciting Tesla-related announcements recently, and we anticipate more. Tesla's track record of outperforming estimates and turning a profit has increased investor confidence in the company's ability to fulfill its long-term goals. These aren't just theories, they're verifiable facts backed by information from the leading automaker and solid proof. As we proceed, we'll look at some recent Tesla news and discuss any potential long-term implications for Tesla stock. Let's move forward now. In terms of transportation, let's examine a few EV producers. Tesla's shares are up today after data from the Chinese Passenger Car Association showed that the business sold over 84,000 electric vehicles in China in August, a 9.3% increase from the previous year. Sales of the Chinese-made Model 3 and Model Y increased by over 30% in the previous month. This is good news for Tesla, especially considering how the industry's price wars are being fueled by China's intense competitiveness. Last week, Tesla reduced the price of its Model S and Model X in China as well as the US. For the time being, demand and margins seem to be benefiting from this, but time will tell. It's widely believed in the market that Tesla is willing to temporarily give up some margin pressure in order to maintain and expand its market domination in both China and the US. Recent sales data indicates notable expansion. Li Auto, a well-known competitor in China, shipped almost 35,000 cars in August, up 663% from the same month the previous year. Tesla has been cutting the price of its cars since the start of the year, which has impacted its quarterly margins and raised investor concerns. However, a lot of people are ignorant of the fact that Tesla's strategy of lowering prices is meant to spur demand in order to maintain production levels. Moreover, the price cuts don't have as large of an effect on profitability as some on Wall Street had expected. Contrary to popular belief, Tesla's profit margin is actually in rather good condition. Welcome back to Tesla. Everyone, see you tomorrow. Clearly, Tesla has advantages over both new and old automakers in terms of resources. Tesla is the first pure-play electric car manufacturer that continuously makes a profit, as per generally accepted accounting standards, GAAP. Tesla may report GAAP profits in 2023 for the fourth consecutive year. On the other hand, while most traditional automakers appear to be profitable, their electric vehicle businesses are obviously losing money and burning cash. As long as Tesla continues to produce and sell cars, these price cuts won't have a significant effect on the company in the long run. Before we go any further, if you like this kind of stuff, please make sure to subscribe, press the like button, and activate post alerts so you can keep up to date on everything Tesla. Production is already ramping up at Tesla's Gigafactories. For instance, the company's Giga Shanghai plant just achieved the milestone of producing 2 million cars. On January 7, 2019, work on the Tesla Giga Shanghai construction project got underway, and it was finished in late 2019. This response time was quite quick. Initially, only the Model 3 was manufactured. However, by the close of 2020 and the start of 2021, the Model Y was also manufactured and distributed. After producing 1 million electric cars in 33 months in August 2022, the factory has now manufactured 2 million cars in just 13 months. 2/5 of all Teslas currently on the market are produced in the Shanghai facility, which has produced around 5 million units altogether for Tesla. This Chinese plant, which at first served the local market, gradually developed into Tesla's main export hub, covering not just the surrounding markets but also Europe and, more recently, Canada. It is the largest all-electric production plant in the world, with an estimated installed manufacturing capacity of more than 1 million units annually. Although Tesla says the plant can generate over 750,000 units annually, the data shows that a much higher number is really produced there. For instance, more than 935,000 units have been sold domestically and internationally throughout the past 12 months. It's also critical to keep in mind that, as opposed to a 50/50 joint venture, Tesla was the first foreign manufacturer authorized to open a totally owned production site in China. Actually, this is being ignored by the market. Another thing the market is ignoring is the chance that Tesla will license other EV makers to utilize the FSD software. Stated differently, Tesla may decide to form alliances with its current competitors. In North America, Tesla's superchargers are already essentially standard. Tesla has revealed charging partnerships with companies such as Ford, Honda, GM, Rivian, Volvo, and Polestar. Honda just announced that it will adopt Tesla's electric vehicle charging connector for its forthcoming vehicles, joining the other holdouts. The carmaker plans to install Tesla's connector, now known as the North American Charging Standard (NACS), in every vehicle by 2025. Like other automakers who have embraced the NACS, Honda has promised to make CCS Combo available to NACS adapters by 2025. This means that Tesla's massive and reliable charging network will be accessible to both its existing and next models. Fast charging and DC charging networks that weren't built like Tesla are now known to be largely unreliable. When Honda launches its EVs in the future, users may find it easier because they will have access to Tesla's supercharger and be part of a new network. As part of its supercharging strategy, Tesla is aiming to expand the number of charging stations available globally, in addition to facilitating connections between other electric vehicles and its network. For instance, the automaker plans to install 20,000 electric vehicle charging stations at 2,000 Hilton locations in the US, Mexico, and Canada beginning next year. Wall hookups are a key strategy that Tesla intends to increase broader acceptance of, since they will make charging stations more convenient. The efforts made by Tesla to achieve sustainability and independence are starting to be recognized by a wider audience. A recent Wall Street Journal report claims that Tesla is outpacing its competitors in the speed and cost of charging station development. It has received millions of dollars in federal support because of its speed and affordability, and as electric vehicles grow more popular, it has developed a substantial infrastructure advantage. Think about this. In the US, 3 out of every 5 fast chargers are owned and run by Tesla. This suggests that the business has a significant competitive advantage, which might enable it to hold onto its leadership position in the developing EV market. Another projection from Piper Sandler states that Tesla might make $885 million from superchargers this year and $10 billion annually over the next 10 years. This sharp increase in Tesla's market capitalization and revenue will dictate the course of the company's stock price going forward. The fact that investors have responded positively to Tesla's decision to allow other companies to use its network of superchargers and to its strategy of cutting costs and forgoing certain earnings in order to establish market domination serves as evidence of this. Consequently, the stock of the company has increased by over 4 times this year. Superchargers might therefore continue to produce profits, which would cause Tesla's stock price to increase much more than it has already. Tesla continues to expand quickly as electric vehicles, EVs, overtake gasoline-powered vehicles in the market. Even though the price of electric vehicle stock still includes high expectations, Tesla still has a long growth runway ahead of it, as seen by its sales report and the announcement about its superchargers. What is your emotional state? Please share your thoughts about Tesla in the space provided for comments below. To learn more about Tesla's latest endeavors, click on the next video that loads on your screen. I'll catch up with you there.